And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week: Berkshire Hathaway, the multinational hedge fund led by billionaire Warren Buffett, has significantly increased its stake in Occidental Petroleum, one of the largest U.S. oil producers. Warren Buffett's Berkshire Hathaway has expanded its investment in Occidental Petroleum, acquiring additional 2.95 million shares according to a recent regulatory filing. This move brings Berkshire's total stake in Occidental to nearly 29%, valued at approximately 15.37 billion as of Monday. Since last Thursday, Berkshire has paid around 176 million in three separate transactions to bolster its position in the US oil giant. Back in August 2022, Berkshire gained regulatory approval to own up to 50% of Occidental, although Buffett had clarified he had no intention to acquire the Houston-based company outright. Analysts speculate that Buffett's increased investment could diversify Berkshire's energy portfolio, which already includes various utilities, electricity distributors, and renewable energy products. Occidental Petroleum shares have showed a marginal uptake in pre-market trading following Berkshire's latest investment. This development underscores Warren Buffett's confidence in the energy sector amid global economic shift. With Buffett holding warrants to purchase an additional 83.5 million Occidental shares at a favorable price, the fund's influence in the oil market is set to grow even further. Also on Follow the Money this week, US regulators have issued stern warnings to some of the country's largest banks, demanding improvements to their contingency plans in case of financial instability. The Federal Reserve and the FDIC have singled out Bank of America, Citigroup, Goldman Sachs, and JP Morgan Chase, ordering them to enhance their living wills. These documents outline how the banks would manage bankruptcy scenarios without government assistance. Regulators have pinpointed concerns over the bank's ability to safely unwind their derivatives portfolio, which collectively amount to trillions of dollars. Issues include managing risk related to liquidity, data accuracy, and regulatory compliance. Citigroup has faced heightened scrutiny, with the FDIC labeling their plan as deficient due to issues with data management and control accuracy. However, the Federal Reserve has refrained from a similar judgment, indicating ongoing discussions over the plan's adequacy. Market reactions have been evident, with shares of JP Morgan, Bank of America, Goldman Sachs, and Citigroup experiencing slight declines, reflecting investor concerns over regulatory pressures. As these banks prepare to revise their plans by September, the focus remains on bolstering their resilience to potential financial shocks without relying on taxpayers' funds. That's all for Follow the Money this week. Thank you for joining us. Join us again next week in the latest updates in the world of money. Back over to the studio for Trade of the Day. Welcome to Trade of the Day, our groundbreaking weekly trading series where we reveal the secrets to achieving consistent weekly returns in the fast-paced world of day trading. Join us every week on this exhilarating journey as we decode the strategies and mindset needed to harness the power of the market and unlock remarkable financial growth. Whether you're a new trader seeking to build your wealth or a seasoned investor aiming to amplify your gains, our series is your roadmap to success. Get ready to revolutionize your trading approach and embark on a path towards achieving your financial dreams, one week at a time. Also, we'd love to know where in the world you're tuning in from, so post in the comments below. A reminder that this is not financial advice and that trading comes with real risk. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and skill to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet needs access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market, taking one trade a week, using one model, risking no more than 2% of your equity, looking to make a 1 to 3 risk to reward. So you're risking 2% to make 6%. We had a total of 4 trades this week for a potential return of 24%. It's important to know that everything we share here is how we trade at I'm the Trader. But before we dive into this week's trade of the day, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader must have in their trading. If you don't have these 3 pillars in your trading, you're setting yourself up to fail. Confidence in your trading edge comes from three things. One, understanding the market and how it operates. Two, having one trading model that has IPTA signatures. Three, having a plan and process that you follow every single day. Successful trading is boring. You're doing the same thing over and over again. This is the three-step process I use to take trades weekly. Step one, condition. This is based on the higher time frame directional bias. Step two, stage. What sets up your trade? What does it look like? Step three, execution. Can you execute? Have your entry criteria been met to get in a trade? The most important step is step two, the stage. Because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for setup. First, we have step one, condition. Determine the higher time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This will give you your condition going into the week. Several factors go into determining the higher time frame directional bias. However, there are only two options. It's either you're expecting the weekly candle to expand higher or you're expecting the weekly candle to expand lower. Then we have step two, stage. What sets up your trade? What does it look like? First, we look at the economic calendar for the week. It lets us know when to look for a setup. We look for medium to high impact news drive to narrow our focus. We stock setup on calendar day and after the news release. The optimal days to trade this week were Monday, Tuesday, Thursday, and Friday. Secondly, we look at what sets up your trade. What does it look like? This would be your model. If your weekly analysis suggests that price is going higher, then you're in a buy program and should be hunting long formations. For our buy model, we want to see price trade below a key low, displacement higher causing a market structure shift. The displacement leg must have a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. If your weekly analysis suggests that price is going lower, then you're in a sell program and should be hunting sell formations. For our sell model, we want to see price trade above a key high, displacement lower causing a market structure shift. The displacement leg must have a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. Then we have step three, execution. Once the stage is set, when and how do you execute? For execution, we're looking to enter on the fair value gap or order block created in the displacement leg that took structure. You have two options here. You can either enter a limit order at the fair value gap or a limit order at the order block. We use the fair value gap near the equilibrium of the range. You can also use the low hanging fruit option, meaning the one closest to the price. Stop loss will go below the swing low for a buy and at the swing high for a sell. You're always going to be targeting a 1 to 3. It's important to know that you can have both model form in a span of a day or a week, but your high probability trades will be in the direction of your weekly program. Here are some factors to consider for high probability setup. First, we have time, the most important aspect of trading. At what time is the setup occurring? Then we have range. Where are we within the range? Are we in the upper, middle, or lower quadrant with respect to buy or sell? Then we have liquidity. Is there or does price create liquidity right in front of the fair value gap or order block? With regards to this liquidity, once price takes the liquidity and enters the fair value gap or order block, you should see an immediate reaction. Lastly, when can you no longer enter the trade? Where is your cutoff point? For me, once price leaves the 0.25 fib extension, I'm no longer interested in the trade. Trading is a solo sport. You have to make it unique to you and your personality. I know all of this sounds complicated, I'm sure, if you're hearing it for the first time, but it's really simple. You just need to show up on the charts and look for it. Now let's head over to price action and look for it in price this week. Welcome to Tracking IPTA. Price action this week was incredible to witness. Every week, I'm building more confidence in identifying the model and executing without hesitation. Once the entry criteria are met, obviously. Although I'm improving as a trader and I think the results are starting to speak for themselves, I'm still struggling with my exits. I find myself getting impatient when my trade is near TP. This has caused me this week to close trades prematurely outside of the model. I'm not perfect, guys. I'm a trader. And for us, the battle is internal. I'm placing too much pressure on myself and I need to trust the model and let it do the heavy lifting. I know with time and experience, I will get better. I finished the week with a 5.2% increase in equity, $1,295, and overall we're up on the account 29%, which is $7,255. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspect of trading, the most important tool you need to track down IPDA. Now remember, even though I'm going to show you both buy and sell models, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your high time frame direction is bullish, and vice versa. It's just your probability of winning reduces significantly when you go against the high time frame directional bias. If you're new to trading, I do suggest only taking trades in the direction of your weekly program. We're going into this hunt with the understanding that you guys have already arrived at your high time frame directional bias. This is a hunt purely for just setup. To the hunt, let's go. Monday, June 17, trade of the day breakdown. We had the AM session buy formation. Let's break it down. As always, we start with the economic calendar, and as you can see, 8:30 we had high impact news coming out. 9:30 to 10 o'clock opening range. We're not trading. We're looking to see what price is doing. We trade below a key low, displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg that took structure near the equilibrium of the range. And as you can see, the first discount array below 50% is the high of this busy right here. So you would have been tagged in this trade at 10:26, breaking even at 11:17, taking out at 12:15 for a total time of 1 hour 47 minutes in this trade. Drawdown in this trade was 54 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we have the time aspect is the AM session. We have the range. We're in the middle to lower quadrant. We're in a discount for a buy. Also, we have liquidity, this short-term low right in front of the busy high right here. We have liquidity created in front of the fair value gap, making this a 3 out of 3 for high probability setup that netted you 6%. This was the trade that netted me my 5% for the week, and I was done trading. Okay, so you'll be done trading on this particular account after this day. All the other setups that come, you can take them on a separate account. Okay, this was the trade. As you can see, I only took one trade this week on the 17th. And that was this trade right here, Monday, June 17th. That was this trade I took. Friday, June 21st, trade of the day breakdown. We had the AM session buy formation. Let's break it down. As always, we start with the economic news. And as you can see, we had medium to high impact news come out in the morning, 9:45 and 10 o'clock. We also had a 10:30 news come out on Econoday. I usually use Econoday and Forest Factory. The main economic calendar I use is Econoday. I use Forest Factory because it's easy on the eyes as well. Okay, so we had news at 10:30 as well. So after that 10:30 news, we had price trade below a kilo, displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the equilibrium of the range. As you can see, we have a swing high formed right here. First, discount array below 50% is the consequent encouragement of this busy right here. So you would have been tagged in this trade at 10:52, breaking even at 11:03, taking out that trade at 11:49 for a total time of 57 minutes in this trade. Drawdown in this trade was 27 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we had the time aspect is the AM session. Post 10:10, check. The range, we're in the middle and lower quadrant of the range. We're in a discount for a buy, check. Liquidity, we have a short-term low created right here in front of the busy. We have liquidity right here. So 3 out of the 3, making this a high probability setup that netted you 6%. I did enter this trade as well right here when we hit break even. I moved my stop to break even, obviously, to right here. I believe it was right here. And as you can see, price came close to TP. It came close to the TP, dropped all the way down to say hello to the break even, and went up, hit the TP. If you follow me on Instagram, I posted this video on my stories. Follow me on Instagram if you want to keep up to date on these daily trades, all right? Because I post them on my Instagram. Yeah, it came up to my TP, missed it by a tick, came down, said hello to my break even by a couple ticks, went up and hit TP. Okay, so that was the trade for Friday. Well, the first trade for Friday. Friday was action-packed day. We had 3 trades. Let's break them down. We also had the launch session sell formation form on Friday. We've had the economic news come out already in the morning. Beginning of the lunch session, we have price trade above a key high is an AM session high. Displacement lower causing a market structure shift. It takes multiple structures. The displacement leg that took structure has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. Execution, we're looking to enter on a fair value gap created in a displacement leg that took structure near the equilibrium of the range. As you can see, we have the first premium array above the 50% is the high of the SIBI. So you would have been tagged in this trade at 12.19. You don't get to break even. You're taken out at 12.44 for a total time of 25 minutes in this trade. Drawdown in this trade was one tick for a 6% bagged and tagged. You're coming home with us. Let's look at factors that made this a high probability setup. First, we have the time aspect is a lunch session. Range, we're in the middle to upper quadrant, we're in a premium for a sell. Liquidity, we have a short-term high right here created in front of the SIBI, making this 3 out of 3 for a high probability setup that netted you 6%. Friday, June 21st, PM session, we had a buy formation form. Let's break it down. PM session start, we have price trade below key low, lunch session low, displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg near the equilibrium of the range. Had a swing high formed right here. Once this down closed candle closed, it would have confirmed this swing high, and you'd be entering at the high of this busy because that's the first discount array below 50%. You would have been tagged in this trade at 141, breaking even at 151, taking out that trade at 152 for a total time of 11 minutes in this trade. Drawdown in this trade was 18 ticks for a 6% bag and tag. Let's look at factors that made this trade a high probability setup. First, we have the time aspect as the PM session. The range, we're in the middle to lower quadrant of the range. Liquidity, there's no liquidity created in this setup, but we do have 2 out of 3 matching up to make this a high probability setup that netted you 6%. If you wasn't able to enter in the market here, the market actually comes back into the BC at 204 to give you another opportunity to capture that 6%. Okay. Friday was amazing. We had back-to-backs. Each session had its own setup, which was incredible to witness. Guys, hard work pays off. Don't give up. Okay. The skill, it's not easy, like I always said, but it's best industry to be in. And I'm so happy that all my hard work is actually showing results. I'm finally seeing results in everything that I've put into this. 4 years of blood, sweat, and tears of studying ICT content, taking notes, watching videos, being chart time. It's just been an amalgamation of 4 years of just learning this information and it's clicked, and now I'm seeing the results and it's amazing. This week I hit a milestone for me. I reached the 5 days of over 200 winning days on TopSep's funded account. I'm officially eligible for my first payout. I ended the week, I think was 2,200, 2,260 or something like that. So I'm able to withdraw half of that, which is around $1,300, which is the most amount of money I've ever made in a week in my entire life. So congratulations to me. I like to thank my old self for not giving up on myself and for keeping going even at times when I wanted to give up. Just kept going because I knew that I was going to get to this point, and I'm here, and it's an amazing feeling. Each and every one of you needs to be able to live in this moment and experience what I'm experiencing right now. Okay, never give up. Thank you guys for watching Tracking IBDA. See you all next Saturday. Every week we have shown you at least one or more opportunities that could have netted you 5%. With a 2% risk, if you had taken all 4 trades this week, you'd be looking at 24% for the week. But remember, we're only looking for one trade that will net us our 5%, and we're done trading. As traders, we must be content with enough, and we must learn to limit trade frequency. The less you're in the market, the less of your money it will take. Thank you guys for watching. Hopefully you found Trade of the Day insightful and you enjoyed this one. Deciding to become a trader is the greatest decision one will ever make. It is the fastest way to build the life that you want. And too many of us fail at it. 90% actually. This is because we're not equipped with the right tools to ensure survival, let alone thrive. There's a way to succeed at trading. Trade of the Day is about showing you how we at I'm the Trader are doing it and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you guys for watching. See you all next Saturday, same time, same place. Happy hunting.